Kraken's parent is buying Bitnomial for $550 million in cash and stock. Payward, the holding company behind Kraken, has agreed to acquire Bitnomial for $550 million in cash and stock, CoinDesk reported on April 17th. Bitnomial runs a CFTC-regulated derivatives exchange and clearinghouse in the United States, a license set that Kraken has wanted for years. The deal, if it closes as announced, lands Kraken inside the U.S. futures and options perimeter without forcing the exchange to build that infrastructure itself. That has been the long-running gap between Kraken and its largest American competitor, Coinbase, which spent 2024 and 2025 scaling up its own CFTC-registered futures venue. What Bitnomial actually brings Bitnomial is not a household name, but it holds three specific CFTC registrations that matter here: Designated Contract Market, Derivatives Clearing Organization, and Swap Execution Facility. Those three designations let Bitnomial list and clear physically settled digital asset futures under federal oversight, something most crypto-native venues cannot offer U.S. customers legally. The exchange has historically focused on Bitcoin futures with physical delivery, meaning contracts settle in actual BTC rather than cash. That product mix is narrow compared to what CME or Binance list, but the licenses are the asset. Building the same stack from scratch would take Kraken 18 to 24 months and carry no guarantee of approval. Paying $550 million to skip that timeline is the logic of the deal. Payward is using a mix of cash and Kraken equity, which matters given the company's public filings late last year pointing toward an IPO. Stock as part of the consideration means Bitnomial's shareholders become Kraken shareholders before any listing event. Why a spot exchange wants a derivatives license? Spot trading fees have compressed year over year as competition from Coinbase, Binance, and zero-fee venues has intensified. Derivatives carry higher margins, higher volume per user, and stickier institutional flow. Exchanges that can run spot, perpetuals, and options under one roof capture more of each trader's activity. The catch for U.S.-facing venues is that perpetuals, which dominate offshore volume, remain off-limits domestically. Dated futures and options are the only permissible derivatives products for American retail, and those require the CFTC designations Bitnomial already holds. Kraken has offered U.S. futures since 2021 through a prior acquisition, but Bitnomial's clearinghouse expands what the exchange can self-clear, rather than routing through a third party. There is also a defensive element. Coinbase rolled out U.S. perpetual-style futures via its own CFTC venue last year and has been pulling institutional desks away from Kraken on futures integrated order flow. A $550 million check closes that gap faster than any organic build. The IPO angle Payward filed confidentially for a U.S. listing earlier in 2026, and the Bitnomial deal fits the pre-IPO playbook cleanly. A diversified revenue base covering spot, staking, futures, and clearing reads better to public equity investors than a pure spot exchange pitch. It also gives underwriters a growth story that does not depend solely on retail crypto trading volumes, which cycle with Bitcoin's price. Using stock in the consideration has a second effect. It locks Bitnomial's team into Kraken's pre-IPO cap table. For Bitnomial's founders, the payoff is tied to how Kraken trades once it lists, not a clean cash exit today. What it means for U.S. traders. The near-term change for end users is limited. Bitnomial's existing futures products will continue to run, and Kraken will likely migrate them onto its own front end over the next 12 months. Institutional accounts that already trade on Bitnomial gain access to Kraken's deeper spot liquidity for hedging. Retail users on Kraken gain access to CFTC-cleared BTC futures without leaving the platform once integration completes. The second-order effect is competitive. With Kraken now holding a DCO license, the U.S. crypto derivatives market compresses further around Coinbase, CME, Kraken, and a shrinking set of independent venues. Bitnomial as a standalone player is gone. Independent CFTC-registered crypto derivatives exchanges can be counted on one hand.